So we're just going to do a quick video here on capitulation and what it means and how to spot it. And this is probably the best example of in recent history of capitulation is this March bear market, this February-March bear market that we had when the coronavirus hit. And it sold off from 3,400 down to 2185 area in really just in a 5-6 weeks period. So how do you tell capitulation? Well, we see there's a couple of things that you're looking for. When you get and this is what we also call an island reversal, but the capitulation is the market is absolutely tanking and the volume is increasing as it tanks. Now, on the day of the capitulation, it wasn't the all-time high volume, but it was right up there. And all these days in here, huge volume spikes onto the downside. But when you get a candle with a long wick down, this happens to be a daily, but doesn't matter. It can be on a intraday, 2-minute, 5-minute, hourly, doesn't matter. It's all the same. When you get this big long wick down after a huge sell-off on massive volume, long wick down, and then the bulls come in and rescue it, and then the next day, in this case, it gapped up or even moves up, and you get this V bottom pattern. This is capitulation. This here is capitulation. This is where everybody's thrown in the towel. They're heading for the hills, and it's time to go. And of course, that's the worst time to sell. Which of course is it is the worst time to sell. But that's when you find just wait a second here. That's not it. Just 1 second. So this is just this is the usual chart of it. Here's your greed. It was when most retail clients buy, and here's fears, and this is when most retail clients sell. Okay, sorry about that. So this is typical. So here is why I said GME buyers, it's not going to end well for them. This is where the greed comes in at 500, and here's where they're capitulating and selling out at 100. So this is your typical capitulation at the bottom here, where you see this big sell-off. So in regards to the capitulation and how to identify it, it's a big spike down on huge volume, long wick down, closes near the top of the channel, and then you get this V bottom pattern. That's your capitulation. You'll see it. Once you see it, once you see it a bunch of times, you'll see it right away. You'll recognize it, and we see it all the time, even on day trading, intraday, where we get these big spikes down, and then they come back up. Let me see if I can find one. So you see today here, this is the GME. This was up at 500, and it sells off, keeps going down. And then this one halt, you get this big spike down, and then the next candle closes green, and then it pops up. So here's your V bottom. That's your capitulation. This is your buy signal in here, and from there it went from 150 back up to 300. So it 50% retracement there. That's a prime example of capitulation. Now in this, and you can see it's on big volume. These spikes down are big volume, but on this one, right up at the top. Now it ended up being green volume because the trade, it closed green. And so the candle can close red or green. The key is that you have a long wick down and it closes it. So here's was the open, spikes down and closes at the top of the range. That's capitulation.